Yo, what's going on, guys? This is going to be a little short of a video, but I'm going to kind of be explaining the difference between old highs and new highs, okay, and how to use them with market structure shifts. So lately I've been seeing some posts, and people got old highs as market structure shifts, which is not really the market structure shift, okay? And there is an exception to this. I will explain in a second, okay? So basically, I'm in the 1 minute time frame right now, okay? And what I see people do is they'll be like, oh, if we break this high, that'll be market structure shift, okay? And this could be a market structure shift if we break this high, but we have to thoroughly displace through it, and it's probably a high on like the hour time frame or whatever time frame. This is probably a more significant high in the higher time frame. So if you're looking this from a fractals perspective, okay, this is going to be like a single candle high, okay? This is just going to be a wick up here. And this is going to be the only high. We're not going to see any of these other intermediate term highs, okay? There's just going to be one single high, and it's going to be up here. Why? Because here's the highest higher here, okay? So this is only going to be a high in a higher time frame. So we could get a market structure shift here, but us as a 1 minute trader, if we are trading the 1 minute, this is going to be your target. We are not anticipating a run through this in order to be a market structure shift. Okay, we will anticipate that only if we see it after the fact in the 1 hour. Okay, so what do I mean by this? So like right now, this would be an old high. This would be an old high. All these would be old highs. Okay, so if I use my indicator, let's use a swing high or swing whatever indicator. Okay, I do not like this one. I will try to use another one. Okay, I'll just do this. Okay, so like right here, at the moment, this is your most recent swing high. This is old market structure. All this is old market structure. Okay, so all I care about right now is the most recent swing high to find a market structure shift. Okay, so now if we were to trade above this with displacement, that'd be market structure shift. And also, you gotta assume we hit liquidity, so we've not hit liquidity yet. So obviously, this is a scenario where we need to hit liquidity first, which we are about to. But let's say we already hit liquidity here. Okay, if we already hit liquidity here, if we traded above this and we got a fair value gap or displacement above this, this would be market structure shift. Now that this high is created, to me, this is just now an old high. This is the new recent high. This is the high you're looking for to be the market structure shift, okay? You don't care about this high or not. A lot of people, they say, oh, this is the market structure shift if we break above this high, okay? Then it's not the market structure shift now because this most recent high was created. Okay, again, right here. Now this high would be the high. Okay, here's where I'm looking for a market structure shift. Over this high, I would not care. As long as we break over this high with displacement, that's now your new market structure shift. So now, after this high is created, this is not old structure because now we get a new high in between. Okay, so now I'm looking for a swing over this high. These would just be potential targets. Okay, so now what? So now what I see is this. We broke over this high, and let's say we never hit this high. Let's say we went on this high, we went back down to this fair value gap. This would be your target. Okay, but now if you look, if we go to like the 5 minute, okay, there's only going to be one high. This is the only high in the 5 minute. So ideally, 5 minute time traders, 5 minute time frame traders, they're not entering here. So let's say we saw us trade above this fair value gap, okay? When you see us trade above this fair value gap, what does that mean? That there's your market structure shift. We took liquidity. Let's say you enter right here, okay? So I'm just going to draw an arrow. Let's say you enter right here because you saw we traded through the fair value gap and we closed above with a strong displacement, okay? If you took that long, this would be your target. If a 5 minute trader were on the 1 minute waiting for a market structure shift in the 5 minute, they would not enter here. What they would be waiting for is a displacement above this high. But us, if you're on the 1 minute, you're not going to anticipate, okay, we're going to break through this high with displacement. You don't know if we're going to break through this high with displacement. Just like a 5 minute trader doesn't know if we're going to get a market structure shift. So a 5 minute trader would not have entered yet, okay? A 5 minute trader would be waiting for displacement above this and then maybe an entry in a fair value gap here. Then they would enter. But if you're 1 minute trader, this would be your target, okay? And what a lot of people do is they try to guess, okay, there's going to be market structure shift. But it's very, very tough to do that because if you're trying to guess if there's going to be market structure shift, that means some of your plays are going to go from wins to losses. Because if I'm longing here and I'm like, oh, this should be a market structure shift in the 5 minutes, so I am just expecting a lot of displacement through this. If that doesn't happen and we just take this and then dump again, you're screwed, okay? So if you're in the 1 minute and we trade above an old recent swing high, this would be your target, versus people in the 5 minute are not in yet. They're waiting for this high to be broken and then they're getting in. Okay, so this is how you get kind of early entries in the 1 minute, but you can't guess if this is going to be a market structure shift or not. If I traded this in the 1 minute, I would probably be out most here and then maybe leave a runner in case this was a market structure shift. Okay, so that's something to realize. And you can see right here, even though we technically take buy side liquidity here, okay, which is buy side in the 1 minute, if you look, okay, do you notice how big these candles are? Okay, we took liquidity. These are institutional candles. We break structure here. Even though we hit this, you can kind of see there is displacement on the 5 minute, which means what? Which means you long the fair value gap. Okay, so if we draw the 5 minute fair value gap right here, that's what now we're looking for long. So let's say we missed the 1 minute. Now we're trying to long here, and you can see it ends up working very nicely. And all this was a retracing the discount on the smaller time frame. Okay, so you can see we just retraced in the discount in this fair value gap. Okay, but again, a lot of people don't know. They'll label this the market structure shift if they're on the 1. This is the market structure shift on the 5. I get it, but you can't anticipate this is going to be a market structure shift from way down here. You're only looking for the most recent high, right? So again, this could be a market structure shift, but us as traders, this is only our target at the moment. If you want to leave runners and guess, okay, I think we're going to have a big market structure shift up here. If you truly want to leave runners and guess, oh, this is going to be a market structure shift, be my guess. But us as traders, this is really our final target, because we don't know if there's going to be a market structure shift in the higher time frame. If we do end up selling runners here and then keep pumping, then we would probably be like, oh, okay, this is now a market structure shift in the hourly, which might help us say, okay, we should still be bullish and still go up, okay? But as a 5 minute trader or 1 minute trader, this is ideally your target, okay? You're typically not going to want to hold any time past that, because if you hold most of your position past this high, you're going to be guessing, okay, there's going to be a market structure shift here. And you cannot guess that there's going to be a market structure shift. This is a fact that this is a market structure shift. Market structure shifts are not objective, okay? This is just a fact. But this is not a fact that we're going to break this high and this is going to be a market structure shift, okay? Which is why, in case this is a liquidity purge, you're selling here as a 5 minute trader. If you're like a 15 minute trader, an hourly trader, okay, if we go to the 15 minute, or I think this is better for the hourly, okay, your market structure shift would be if you got a giant displacement above here, okay, and then you'd enter, okay? So if you got something like this with a fair value gap, then you'd enter. But as an hourly trader, you're not really doing anything here, okay? If you want to try to get a sniper entry and you're anticipating this, fine, but it's just going to be a little lower probability, and you're kind of be guessing, oh, we're going to get a market structure shift here, that's what I'm going to long. But this would be the most recent swing high that you would want to be broken over if you were to get a market structure shift here. Yeah, so that is all I have for this video. Hope you guys enjoyed. Again, I see a lot of people label, oh, this would be a market structure shift if we broke it. But ideally, this would just be an old high, because we already traded back down here, and this is just an old high, and we've already created a new lower high, which is right here, and then we just created another new lower high. So this would be old structure, this would be old structure, this would be the new structure, okay? This is what you want to see a break over. I hope you guys enjoy this video. Let me know if you have any questions in my Discord, and other than that, peace out.